Hello and welcome to another lesson. I hope you are well. Today, we are going to talk about something called quarterly theory. Now, the first thing I want to make very, very clear when it comes to quote unquote quarterly theory is that this is not the be all end all in terms of the strategy, but we need to understand something that lies within quarterly theory to get our strategy really, really precise. But for the sake of this lesson, I'm going to explain to you exactly how quarterly theory works, what the idea behind it is, and how you can potentially take advantage of it when you are able to basically see it. And I've got this particular document right here. And I've also got this particular document right here, which I've created a few months ago now, which is going to give you all of the session timings that you need to refer to in terms of what quarterly theory actually is and what it actually does. Now, the very first thing I would like to do with regards to quarterly theory is just draw you a box. And with regards to this box, the only thing I want to do here is split this box into certain sections because this is going to be the easiest way to be able to explain this process to you. Now, with anything in terms of a square, a quarter, everything can be sectioned into four pieces. And what we are basically referencing with regards to these four pieces is all down to time. And the time element with regards to quarterly theory is what we're looking to focus on. And the second thing we're going to focus on is price. Now, if you look up something called seasonality with regards to trading, you will see that basically in the span of an average over 1 year in price, you will get price action throughout a whole year. So if you look at a chart, a random chart, and you are able to see a year's worth of price action, just random, it might look something like that. In fact, if we generally go onto a I'll go to a daily chart here. Let me just delete this indicator. And I'll go on to something like Euro. Okay, now what you should see, if I actually get out, we're into 2024, so I'm going to pluck out 2023 just to make things a little bit, 2024, sorry, because we're in 2025 now. So this is the first, this line here indicates the 1st of January 2024. Now, if I come all the way to December, this is the last day of the year. So all of this price action between this high right here, all the way down to basically this low. This is 1 year's worth of data that was printed on the Euro USD in a period of 2024. Now, it may look like random candles to you, but basically this is separated into a time element. And what we essentially look for is splitting this whole thing into quarters in order to find seasonality. So if we bear in mind, there's 12 months in a year, half of that is 6, half of that is 3. So every 3 months, so from January to March, we're just going to draw a line. And this isn't the most precise in terms of the last day, but I'm just going to do this on here. And then we're going to go March, April, May, June, all the way here. So now I'm going to take this to the end of June right here, which basically will take you to that halfway point We're then going to take this from June, July, August, all the way to the end, September, October, November, December. So we're going to take this here. So I'm trying to basically find the quarters, the way price actually breaks up itself in regards to quarters. I believe we need to go to the end of September here, like that. So July, June, August. Okay. Anyway, let's just look at this here for a second. Now, if we actually split this up, and again, this isn't the most precise because I'm doing this in real time with you now. Let's just give that this one right here, for example. Now, let me just do something else here. So we're going to highlight all of these different sections with regards to how price action essentially moves throughout the year. Now, what you should notice is that every quarter in a year, every quarter in a year's worth of price action, we get a change in terms of price action does something slightly different. You can see that we basically came into this motion of consolidation to begin with. And then after that, more or less into the next quarter, the next part of the year, price action dumps to the downside, sweeping under that low, and then really just enters another sort of state of consolidation inside this area before rallying in the third quarter towards this area here, before then rallying to the downside, causing a move, a retest of this level before dumping in this area here. So it doesn't just look like this. With regards to quarterly theory, we expect certain things to happen, and this is the debate with regards to it, because we expect something called accumulation, and after accumulation, we want to see something called manipulation. We then want to see distribution, and after that, realistically, we want to see either a continuation or a reversal. One of the two is absolutely fine. So what this would basically look like from a yearly point of view is the first part of it, and actually what I'm going to do is split this completely in half here. I'm going to draw at the top here first, because what we want to see is accumulation in the first part of the year. We then want to see price in a manipulation phase before then basically approaching the next part where we want to see price distribute back into that level. And then the likelihood is that the next quarter will either continue to the downside, or just for argument's sake, we'll say this has actually caused a massive reversal to take price to the upside. And the idea is that after this has happened here, it will revert all the way back to that level there. Let me just draw something a little bit better. It would ideally revert all the way back from here to here. So it's a cycle that just moves around and around and around. And that's the general consensus of what it's supposed to do. So within this cycle right here, you're hopefully going to get the accumulation. You're then going to get the manipulation. And then after that, you're going to get distribution. And then after that, you're likely to get either a continuation or a reversal in price. And that's how it looks in terms of quarterly theory. That's what essentially we want to look for. Now, sometimes it doesn't work like this. And actually, sometimes you would get this area just kind of doing some form of expansion. Now, once we've had an expansion in price, the likelihood is, or even a continuation, we would call this in price, or reversal, we are not expecting to give us we're not expecting to manipulate in this next cycle, because we've already continued here. What we're looking to do now is probably offer some form of accumulation ready for price to then manipulate, which would then bring us into the next stage where we would get that distribution. So sometimes the cycle of quarterly theory moves completely different to how you would anticipate it actually moving. And this is the thing when it comes to quarterly theory. This is very, very, very subjective, and we're not actually interested in this. The only thing we are actually interested in is understanding that every quarter price action changes. Now, in terms of what the quarter actually means, we call this the yearly cycles because each quarter is going to represent a cycle. So each quarter represents a cycle. So that would basically be here cycle one. So we would have cycle one. We would then have cycle two. We would then have cycle three. We would then have cycle four. And a lot of people, with regards to quarterly theory, have got so hung up on this in terms of it has to move in the exact same order every single time. And we want it to move in this exact same order every time. There's a very big difference here. But the reality is it doesn't always work like this. But that's not our concern right now. If you look at all of this here now, you split this into a year, you can really see what I can see here from just looking at this, and again, this is subjective, but just looking at this from a year, I can see that price action has finished 2023 here in this expansion. We then opened up this part of the year and we broke this structure. So kind of what we did was we reversed. So that really is your reversal in price action. And then the yellow marker right here, in my eyes, would look like accumulation. And I feel like the third cycle of 2024 was manipulation. And then it looks like we distributed in the last part of this area here. So you had accumulation, manipulation, distribution, and then you had that reversal in price. And then the next quarter has obviously started. This is obviously this year's price action that you can see. And it's obviously, if you look at the end of March, which is this last right about here, you can actually see, because we've had so many tariffs and things like that, we've actually just been expanding and expanding. So this is where quarter two doesn't necessarily work, but that's another story for another day. But you can see from a yearly perspective, what we had was some really interesting changes every single price action shift, every single cycle. So this here is the 2024 cycle in price. So this is what's going to help us with regards to something called seasonality, because you know that if you trade Euro USD, there is a 20-year moving average based on seasonality and price. And we know that there's a likelihood that the third cycle of every 2024 is likely to offer you some form of manipulation, for example, or at least some movement. Now, to me, that's a load of tosh. But what I can expect is that after every quarter, we are going to shift in a different pattern. And this is the thing. We cannot move in an expansion forever. Price action cannot do this forever. At some point, it has to do this, and then it has to do this, and then it has to do something like this. That is the fact and reality of the matter. Now, what we are now going to start to do is we're going to start to break down what these cycles would actually look like for us. Because a yearly cycle, this can represent 1 year, but also this can represent a weekly cycles. It can also represent daily cycles. It can also represent session cycles, and it can also represent micro cycles. So with that in mind, if we focus now on what each cycle is likely to do, knowing what we know and understanding what we understand about every single cycle, there is a shift, there is a change in price action. What I would like to focus you on in this particular lesson, and we will talk deeper about it, I would like to focus you now on the more powerful aspect of how it actually really truly works with regards, in my personal opinion, with regards to trading, because we are looking at quarters in price. We are looking at quarters and cycles in price, but I actually want to just draw your attention now to sessions cycle. And what I want to do is I want to focus on a few different outcomes, because the way we want to trade is splitting the day into sessions. In fact, this is more actually going to be the daily cycle, because the day splits itself up into certain blocks. Okay. One day equals 24 hours. Divide that by, is that how you spell divide? Divide that by 4. That will equal 6-hour cycles. So 1 6-hour cycle equals 1 session in price, which translated to make more sense is going to be this. The first cycle is your Asian session. The next cycle is your London session. The cycle after that is your New York AM session. And the cycle after that is your New York PM session. And the cycle starts in terms of time. The first cycle, the daily cycle, goes from 11 p.m. until 11 p.m. UK. That is time, UK time, which would be 6 p.m. until 6 p.m. Eastern time. So New York time. So this is your Asian session, which is going to start, and I'm just going to do this in UK time for now, UK until 5 a.m. Okay. After that, we have the London session, which is going to be 5 a.m. until 11 a.m. And then that would look like 11 a.m. until 5 p.m. This is UK time, by the way. So if you're in another country, you need to just assure that you've got your correct time zone based on what I'm talking about here. But just so everyone's aware, I have got a session with all the times, which is going to be centralized towards New York time. This next one is 5 p.m. until 11 p.m. So that is the timings we're going to utilize for when the sessions actually open in price. Now, what we're going to look for is that the Asian session would ideally give you that accumulation. And then the London session would offer manipulation in price, meaning that the New York session would offer distribution. The New York AM session would offer that distribution in price, giving you the entry that we always search for. And then the New York PM session would end up doing a reversal or a continuation in price. So in an ideal situation, the London session would essentially give you that high of the day. The AM session would give you that change of the distribution, and then the PM session would give you something else to work with. So you're able to aid the high of the day and the low of the day utilizing quarterly theory in terms of the way cycles move. Now, this is not how it always plays out. But here's the beautiful, this is what I do like using it with regards to quarterly theory, because if the Asian session is basically, if the Asian session is doing something like this, then that basically means I will not be partaking in the London session, because the likelihood is that the London session is more than likely going to be doing something like this, meaning that the New York session is more likely to, let me just do that again, the New York session is more likely to offer some form of manipulation, and then actually the PM session is going to be the one you would want to potentially trade out of this particular area here. So we always want to try and catch the move in the distribution phase, if you like, not or the manipulation phase. We don't want to catch it in the we don't want to catch it in the accumulation. Sorry, we want to catch it in either the manipulation or the distribution. We don't want to catch accumulation. We want to get the volatile moves, and usually they happen in the London session or the New York session. So again, if you were to go back, let me just save that. If you were to go back now and look at price action in terms of what it actually looks like, what we actually get with price. I'm just separating so I can see the sessions, but it doesn't always play this way. You can see here, we had accumulation, then we had manipulation. We had price action, which was accumulating. We then had a rally in price, and then we had manipulation in the New York session. You can see here we had accumulation. We just had a bit of a nothing day here. So the examples in terms of real chart stuff are actually a lot harder to find, and that's why a lot of people tend to struggle. You've got a pretty good one here: accumulation, manipulation, distribution. But I want to help you find the best setups. And the easiest way to explain it in this instance is going to be more or less presented around what the Asian session is now doing for you. Because basically, if the Asian session has offered you accumulation, you are more than likely going to have something to do in London or New York session, or London and New York session. If the Asian session is expanding, then the London session and New York session is unlikely to give you much to do. So the rule you need to basically follow is the Asian session, if it is too volatile, then we do not trade that day. If we are in a ranging market between 30 or between 20 to 40 pips from high to low, we would look to engage in either London or New York. That is basically a golden rule, which you need to include in your trading plan. And I wanted to open up with this. I'm going to do another lesson on course here because I need to explain more things with regards to it in terms of times. But this is kind of your first idea of what it actually is in terms of times. Now, I have included this here in terms of the times, in terms of the rules around what quarterly theory is supposed to do. Take all of these here, these functions, with a pinch of salt. This is just talking from someone with pure experience, but we are going to focus very, very heavily on certain things, which is all to do with time. Time is everything in the market. Hopefully you guys found this one insightful, and I will see you again on the next one.